Time for making tax investments. In fact, this is the last little portion that we have to make tax investments. And those of us who don't have any equity investments, and that's not the two of you, can opt for the Rajiv Gandhi equity.
Three of us, I would say.
Okay, so the three of us. So the Rajiv Gandhi Equity Savings Scheme. We have some new funds that have been launched in this period for those of us who've never invested in equity before. But let's find out from Dhirendra Kumar if it's just the tax saving or does it make sense to pick these funds. Dhirendra, thank you for joining us. The NFO is open until tomorrow, which means that we have one day to make the investment if it does make sense. It's RGESS compliant. Now, if you look at the investment strategy of this particular ICICI Prudential Fund, are you impressed? Should we put our money in this fund?
Yes. Under this plan, under the Rajiv, this is a new entitlement or tax saving option available to investor, and last year it was enlarged. The scope was enhanced a bit. That investors with annual income of up to increase from 10 lakh to 12 lakhs, and if you have made that investment last year, for 2 more years you can still make it. So this is a worthwhile thing, but most of the options currently available to investors are either index fund or pretty tightly defined index fund in the form of an ETF or an open-end fund. So this is going to be a 3-year actively managed closed-end open-end fund, and I find that this will be a fundamentally guided fund. This fund is going to be focused on building a portfolio. It will be a growth portfolio. By design, it will be its investment universe will be top 100 stocks by capitalization. It is likely to carry a portfolio of 20 to 25 stocks. They will be growth stock where the fund manager thinks that the return on earnings is likely to expand. So this looks promising, and ICICI Prudential AMC has proved has been very impressive in recent years with its equity funds, showing its building its track record, been impressive. So one should expect that from this fund. Looks impressive.
But Dhirendra, normally when you talk to someone who's never invested in equity before, you say use a balanced fund. So does it make sense then to use this fund, because it will invest a little bit in debt, but it's not exactly a balanced fund, is it?
Not really. It will remain an equity fund. And here is the fund which can have a nominal fixed income allocation, but that is not by design. So I would say that an investor who has never invested in equity, it is always going to be a little difficult thing riding the ups and downs of the market through an equity fund. But given that you have to get logged in for 3 years, and this will be a large cap.
He saved up some money for the expenses and the jewelry. He wants to know where he should invest that money right now until the wedding. Dhirendra, what would you recommend?
Consider a short-term bond fund, nothing else. And if you don't pay taxes, you can well consider a bank deposit too. Because bank deposit compared to a short-term bond fund, it will be more accessible. And if you don't pay taxes, tax becomes a material difference when choosing a fixed deposit and a short-term bond or any bond fund for that matter.
All right, Dhirendra, many thanks for answering our questions.